Today we're going to talk about a recent proposal by the Austin City Council that will impact your real estate investing strategies. But how this is going to impact your real estate investing strategies is going to depend on how you interpret some recent trends and how you think those may impact future home values. The proposal by the City Council was to reduce the minimum lot size for a single-family home to 2,500 square feet. The current minimum is 5,700. Now the thinking is that if you have a house that currently sits on a 5,700 square foot lot, you could tear it down and build 2 new houses on that same space. If you did this for an entire neighborhood, theoretically you could double the number of homes that you could fit into the same area, which would double the number of people that could live there. This is the definition of more housing density. And that has been on the City Council agenda for a long time now. If you've lived in Austin for any length of time, you may remember Code Next. That project started back in 2012 and it wound up costing over $8 million. Basically the plan was to identify corridors along major transportation routes. And if a single family home was in one of those corridors, it would be rezoned for multifamily so a developer could build a duplex, triplex, or quadplex on that same lot. The problem with this plan is those existing homes are owned by individuals, and they have property rights. So when they grouped together and brought a lawsuit against the city about infringing upon those property rights, that lawsuit effectively killed Code Next. Fast forward to today, and now the City Council is proposing decreasing the minimum lot size. Now this wouldn't change the zoning of those single-family homes, but it could provide an additional incentive for developers. If a lot could be subdivided and the existing home was replaced by 2 new houses, they would be worth more than that existing home and probably worth more than a larger home on that same big lot. If the developer could buy the existing house, tear it down, subdivide the lot, then build 2 new houses and sell them at a profit, it might make sense for that developer to invest the money for the project. Now this brings up an important point to remember if you're analyzing any proposal by the City Council. They usually talk in terms of higher density and affordability. And even though those 2 things may legitimately be their objectives, density and affordability are not necessarily interrelated. Let's take a look at some of the development that's already happened in Austin. The first thing we saw was investors buying an old home and remodeling it. If the cost to buy that home plus the cost to remodel it was less than the price they could get when they sold it, it made sense for them to do this. We also started to see a lot of ADUs or accessory dwelling units. If the lot was big enough, the existing house wasn't touched, but there was an additional unit built on the same property. This could be as simple as a garage apartment or a detached smaller home in the backyard. This is similar to a condo regime. That's when the existing house is torn down and then 2 new houses are built on the same lot. They're not single family homes because they share common space. And that is a definition of a condo. The combined value of those 2 condos might be anywhere between 3 to 5 times more than any other house on that same street. Now the final thing we started to see was when someone tore the existing house down and then built a brand new large house on that big lot. And the value of these new homes could be anywhere between 5 to 10 times more than any of the houses on the same street. Now there were large developments like Mueller, where there was enough land for a large multi-use development. And these types of communities provide a sense of cohesiveness. But there were also a lot of individual projects that were oftentimes limited to a single family home. Now if someone is going to spend the money to build a house like this, in a neighborhood like this, they must have an expectation that all the other houses in that neighborhood are going to be eventually renovated too, right? Well, what happens is that as more and more of these newer homes are built, the value of the older existing homes goes up, which means the cost to build the second one is going to be more than the cost to build the first, and the cost to build the third is probably going to be more than the cost to build the second, and so on. And since the cost to buy the land goes up, the price of that completed home is going to go up too, which is where the Austin City Council proposal may incentivize future development. If a developer could buy the land, whether it's got an existing house on it or not, and build 2 houses, even though they would be smaller, their combined value could be greater than a single house on that same lot. And this could offset the additional cost to buy the land, which might make the additional cost for the entire project make sense. Now the biggest question from an investment standpoint is how much longer can this type of development go on? Well, the short answer is as long as people continue to buy these types of houses in these types of areas. But remember, buyer preferences can change, often very quickly and without any kind of notice. And there are a lot of examples in other U.S. cities where entire neighborhoods are gentrified, but usually it's a much smaller area. Consider the Rainey Street district here in Austin. The zoning laws were changed in the early 2000s, and it took over 20 years before that final single-family home was eventually sold. Now, Rainey Street is only about 7 or 8 city blocks, But you can find examples of the type of development we've been talking about in this video pretty much anywhere within a 10-mile radius of downtown. That's a lot of homes owned by individual homeowners that could eventually be developed, but right now they look exactly the way they did in the 1960s. I pulled some data for East Cesar Chavez and the Holly areas just east of downtown Austin. Now you might think that in these areas there's a very high likelihood that they would completely gentrify in a very short period of time. They're close to downtown, there's a lot of development along that transit rail line that passes right through. But in this area, which is what, about 5 or 6 times bigger than the size of Rainey Street? Today, only about 20% of the homes have been built in the last 10 years, which means that 80% of the homes haven't been touched yet. Now, if you're looking to spend that kind of money in an area like this, you do have some options. To throw out some numbers at you, a teardown on a nice lot can sell upwards of $500,000 just for the land. And one of those completed, new, big, modern homes could go anywhere between $2 and $3 million. Consider what would happen to home values in areas like this if those types of buyers started looking in places like Bee Cave, Lakeway, or even Leander. A big part of real estate investing is being able to anticipate future trends. Maybe the hype is right, and Austin is the biggest boom town that we've seen the last 100 years, and it's going to defy any historical trends. Or maybe the decrease in the number of real estate transactions and the decreasing median prices are evidence that there is not an endless flow of people coming here who have an unlimited amount of money to work with, and they're going to buy anything and everything regardless of the area or the condition. Maybe we've entered a stage where economic fundamentals are going to play more of a role in determining property values. Now, there's no doubt that there's already been a lot of development in the Austin area, and this video will show you what some of that looks like along the Red Line Transit Rail.